All right, let's get right into it. Welcome to this explainer where we are taking all that theoretical investing knowledge you've built up and turning it into actual, completely stress-free action. So many beginners totally grasp the basics of ETFs, but they completely freeze up the second it's time to actually click that buy button. Well, today we're taking all the pressure off. We're going to focus entirely on safely executing your very first practice trade so that your broker's screen stops looking like some complicated spaceship control panel and starts feeling as easy and familiar as checking out an online shopping cart. Listen to this, because it's so relatable. Imagine accidentally buying 10,000 shares of something and literally having to sell your living room furniture just to pay for it. Sounds terrifying, right? Well, that's exactly what a guy named Alex pictured the first time he looked at a trading screen. That paralyzing fear of accidentally bankrupting yourself with one wrong click, it is completely normal. Your brain is essentially screaming that one typo will lead to financial ruin. But the truth? Most beginner mistakes are just minor administrative hiccups that can easily be reversed. Your fear is irrational, but it's a totally natural defensive instinct. Our goal today is to just bypass that instinct entirely. So, to lower your stress and take that cognitive load off your shoulders, here is our game plan for today. We're going to quickly cover the fear, the choice you need to make, the mechanics of the platform, the execution, and finally, the aftermath. Let's jump in. Starting with number one, the fear. Look, financial decisions naturally feel incredibly high stakes, mostly because nobody wants to lose their hard-earned cash. But remember, today, we aren't risking your life savings. We're just building procedural memory. We want the physical process of buying an asset to become as boring, automated, and repeatable as ordering a pizza on your phone. Because here's the thing, practice converts anxiety into familiarity. The basic psychology of learning is super clear on this. Exposure to the things we're scared of reduces our anxiety, and repetition builds competence. You don't need to summon raw superhero courage every single time you log into your brokerage account. You just need to walk through a simple checklist that you're already totally used to. Which brings us to part two, the choice. To safely practice this process before committing any serious money, we need a low-stakes dress rehearsal. Think of it kind of like learning to parallel park. You definitely don't try it for the absolute first time on a busy, narrow downtown street with a line of honking cars behind you, right? You essentially have two training paths here. First up is paper trading. This uses simulated fake money. Now, it's incredibly safe, obviously, but the catch is that it completely lacks real emotional weight. It's super easy to stomach virtual market dips because, well, it's not real. A tiny real trade, on the other hand, uses maybe 10 or 20 actual dollars. The goal here isn't to make a profit. The goal is to trigger and train your actual emotional response to owning a real asset. But you're doing it in a way that's so incredibly small, any mistake just becomes a funny educational anecdote rather than a financial tragedy. So I want you to pause for a quick second. Grab a pen or just open the Notes app on your phone. Write down which of these two options you are choosing for your very first practice trade, and write down exactly why. Physically committing to one of these paths like this drastically reduces your hesitation and gets you moving forward. All right, made your choice. Awesome. Let's move to section 3, the mechanics. Let's cut through all that intimidating broker jargon and break down the interface itself, which, honestly, often looks like it was designed by someone who actively dislikes beginners. You really just need to understand two main concepts here. A market order means you're buying immediately at the best available current price. It's incredibly fast and is super simple. A limit order, however, means you set a strict maximum price that you are willing to pay. The catch? You risk the order not going through at all if the market doesn't hit your specific target. Now, neither type is morally superior, but for beginners who are just buying standard, highly liquid ETFs, a simple market order is perfectly fine, and it's often the most recommended way to start. Now, here is your actual step-by-step trade ticket checklist. Before you click anything on your screen, you need to know exactly what goes into these 5 specific fields. First, the ticker symbol you're buying. Second, the account type you're using. Third, the action, which is buy. Fourth, the amount of money you're spending. And fifth, the order type. Having this exact checklist prepared in advance, it is the absolute best way to beat that fear of making a mistake. And that leads us right into part 4, the execution. I'm basically going to be your calm driving instructor right now. We're sitting in the car, your seatbelt is firmly on, and you are totally ready to place this first order. But before your hand even gets near that mouse, I want you to read this exact phrase to yourself. This is a rehearsal. I am learning mechanics, not predicting the market. I can take small steps completely safely. Literally reading this self-talk script right before you click that buy button is amazing at stopping analysis paralysis right in its tracks.
Okay, here is exactly what you're going to do step by step on that order screen. Step 1, enter your ticker symbol and click Buy. Step 2, enter your tiny rehearsal amount and select a market order. Step 3, the review screen. This is where you just check everything calmly because absolutely nothing has happened yet. Step 4, hit Submit. And just like that, the entire mystery of the broker interface vanishes in just 4 simple clicks.
Almost done. Part 5, the aftermath. Once you hit submit, we need to immediately shift our focus to managing your emotions post-trade. This is absolutely crucial for avoiding any unnecessary panic. You're going to see order statuses pop up, and they can definitely be confusing. If the system says filled, great, everything went perfectly according to plan. But sometimes, beginners completely freak out when they see a pending status or a big warning about unsettled cash. Please do not panic. This is an absolutely standard administrative delay on the broker's end. It's not a financial crisis at all. It's just normal, everyday accounting that might take a day or two to process behind the scenes. Now, let's check your emotional warning signals to make sure you're staying on track. A green flag means you've chosen your ETF, your account is funded, and you're calmly ready. A yellow flag means you're feeling nervous and you keep instinctively refreshing the stock price over and over. If that happens, just slow down. But a major red flag, that's when right after one successful trade, you suddenly start buying trendy stocks just for the thrill of it. Remember, our goal today is discipline, not a joyride to the casino. To help you stay disciplined, I want you to write down your very own trade calmness rule. Just finish this sentence. My rule after placing an order is... So for example, your rule could be immediately closing the app and completely ignoring prices for the rest of the day. Setting these kinds of hard boundaries protects you from those impulsive, adrenaline-fueled clicks right after you make a successful purchase.
And that brings us right to a really crucial post-trade habit, documentation. Start a simple investor log for yourself. Jot down the date, the ticker, the amount, the order type, and honestly, most importantly, the emotions you felt during the process. Doing this actively builds strong long-term memory and completely prevents confusion or chaos the next time you log in.
As we wrap up here, I really want you to internalize this one core principle. Confidence comes from repetition, not from thinking. Reading another 5 investing books isn't going to cure your fear of the broker screen. The only real cure is taking structured action and building that procedural memory. And today, you prove that you can execute a plan safely and effectively. So I'm going to leave you with this question to ponder. What did this practice trade actually teach you about your own investing psychology? What part of the process stressed you out the absolute most, and what actually turned out to be incredibly easy? Take those lessons to heart, and I can promise you your next planned purchase will be calm, collected, and completely expert level. Thanks for joining me on this explainer, and I'll catch you next time.